Hi everyone, today let's talk about the big bank earnings, as well as the Nasdaq Rebalance. Then we'll get into the economic calendar as well as the earnings calendar. And then we'll take a look at Max Payne as this is the third week options expiration. And there are tons of options in the market and we need to pay attention to how they are spread out across the different strikes. Then we'll get into the charts. Then we'll look at my results for the week and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. Starting off with big bank earnings, they mentioned that the banks are expected to pay out $58.8 billion through dividends and buybacks, down 8.2% from a year ago. You can see that laid out for you here. And we already started off with a good session from the big banks. But what I really wanted to highlight here is that they've actually set aside around $5 billion towards default loans for second quarter of this year. And they're expected to set aside an additional $7.6 billion to cover more defaults, which is nearly double what they had for the same time last year. So banks are expecting harder times and they are preparing for this. They're not doing this because they want to be extra safe. They're doing this because they're viewing it as a necessity, and it's something to pay attention to when the banks are setting aside more than $10 billion to cover loan losses. Moving over to the Nasdaq Rebalance, this is happening on 24 July. If you didn't know, they're making some changes where the top 6 mega cap stocks will be cut down to 40% total from the original 50%. So they're trying to decrease the heavyweights for the Nasdaq in order to make it a little bit more stable and a little bit less top heavy. I think this will be interesting to see how it plays out. Those mega caps have really driven a lot of the growth for the Nasdaq. And we might see a little bit less growth from the Nasdaq going forward, but right now it does seem like a decent time to start trimming those mega caps, which arguably are a little bit overvalued. It's worth mentioning that the QQQ holds around $200 billion, and now they're going to sell that 10% currently allocated to those top 6, and that's going to be redistributed across the other 94 stocks in the Nasdaq, which means we could see some selling in those mega caps going into the weeks leading up to this rebalance. Of course, it is worth looking at some of those stocks that could be getting some money, and they're listed here for you, the biggest one being Starbucks, Gilead Sciences, as well as Booking Holdings, worth paying attention to going into the next week as part of that rebalance. Moving over to the Cybertruck, we got news that the first Cybertruck for delivery was actually built today. And after 2 years of delays, it's supposedly going to be on sale for those who have pre-ordered it. You can see everyone at the Gigafactory in Texas huddled around the first Cybertruck. I'm sure that first Cybertruck will be worth millions of dollars just because the first thing of anything seems to be super highly valued. And I'm sure this will be no exception, but the Cybertruck finally being delivered. This could be a driver for Tesla stock to go higher ahead of their earnings this week. Moving over to the economic calendar, not much on Monday. ECB president speaking, but I don't expect that to have a huge effect. Looking at Tuesday, retail sales, that will definitely be important. It's expected to be pretty good and higher than the previous read, so that could be a nice little driver for markets to go higher. Wednesday, the EU has CPI, that will be interesting. Their CPI has been higher than expectations nearly every time for the past few times, and that has not been good. For the US, we have building permits on Wednesday, initial jobless claims on Thursday, as well as Fed manufacturing index, which continues to be negative and expected to be negative this time as well, but slightly less negative than the previous read, and then nothing really here on Friday. Moving over to the earnings calendar, not much here on Monday. Looking at Tuesday, we have Bank of America, Morgan Stanley, Lockheed Martin, Charles Schwab, Interactive Brokers. Looking at Thursday here, we have Tesla, Netflix, IBM, Goldman Sachs, US Bank Corp. So Wednesday going to be a big day for earnings, being mostly driven by Tesla. Looking at Thursday, we have Taiwan Semiconductor, J&J, Abbott Labs, Philip Morris. And then looking at Friday here, we have American Express being pretty much the only one that matters here. SLB, fairly interesting oil company, but American Express being the big one for Friday. Moving over to Max Payne, this is a third week OPEX. You can see the options at almost 4 million already. Put call ratio extremely high at 2.76. You can see zooming out here just how many puts there are in the market. It is all puts, tons and tons of puts in the SPY. And then looking at the highest call strikes down here at 420, 440, you can see that 451 that we were watching. watching basically nothing in comparison to all these puts that we have in the market right now, all the way up to 460. If we get another close like the previous read, up around the top of the puts, 450, 451, 454, somewhere in that zone, that would give us about a 1% move on the week. But with all these puts in the market going into the Friday expiration, I just can't imagine that we're going to be going down this week. Moving over to the charts, starting off with the S&Ps here on the weekly chart. Looking at the structure, basically intact, continuing to make higher highs here. We had a couple pullback weeks, but again, moving higher this week. Momentum still bullish. RSI moving higher. Not in overbought conditions, so everything's still intact. At this point, you would expect to get into the April highs up around 4,600 in my opinion. The peaks in that zone around 4,640. And everything continues to look quite bullish here, getting above this local resistance and then longer term resistance. And then longer term resistance sitting all the way up around 5,000. So lots of room to the upside here for the SPY. Moving over to the daily chart, you can see again, structure is still definitely intact. All the EMAs and SMAs are to the downside, momentum bullish, RSI getting overbought conditions once again. But this is clearly an uptrend. We've been holding above the 50 line for a very long time, and it continues to channel higher here, currently sitting between 448.74 and 453.07. And zooming in here, you can see what that structure looks like, holding that level. If we pull back, then I'm watching 445.49. Certainly could see a pullback, but again, momentum is still bullish. And as long as this level holds, you should be trading this up to around 453.07. Moving over to the Nasdaq on the weekly chart, similar thesis to the SPY. You can see everything still looks bullish. We have a little bit of resistance up around that 1600 level, which is right in this consolidation just below the all-time highs. We're about 6% below all-time highs here on the Nasdaq, sitting up around that 16,700 area. Again, momentum bullish, RSI bullish, super overbought here on the Nasdaq as it's been a little bit more bullish than the SPY. But again, everything is still intact. Moving over to the 1 hour just for a moment, I wanted to highlight in the Friday video, I did mention a potential for a little bit more pullback from this area at 381.90 on the QQQ. And I do think that is still possible, but in this video, I'm more focused on the longer time frames. And like I mentioned, everything is still bullish on the daily and the weekly. And you can see what I was talking about here, pretty extended on the QQQ from that 9 EMA. And it wouldn't shock me if we did pull back into that zone, which is currently sitting all the way down at 371.09, which would be around a 3% move to the downside from current prices. But again, momentum still bullish, RSI in the overbought conditions, but still bullish. And this could happen a few ways here, similar to the end of June where we got a little bit extended, pulled back for 3 days, and then we got the continuation, or going back to mid-June, extension, couple of days of pullback, hit the 21 EMA, hit VWAP, and then you get the continuation. So certainly an area where we could see at least a little bit of pullback early in the week, but overall I would expect this to go higher into the Friday expiration. In terms of levels, currently watching 376.45 as well as 381.90. If this 381.90 level breaks, there's quite a bit of room to my next level, sitting up at 381.37. Moving over to the Russell here on the weekly chart, similar thesis, bullish momentum, bullish RSI, everything looks good, we're marching higher. I've been looking at 195.15 for a while, and I think we will get that next week. We also have the 144 EMA sitting up here at 198.26, right at the wick from these highs here in January. And I do think the Russell is going to get into that zone at some point over the next week or two. Overall, everything still very bullish here on the Russell. Looking at the daily chart, however, you can see we did get a bit of a pullback on Friday. Looking at trend support down around that 189.83 area. Absolutely could pull back a little bit more, retest these highs potentially down at 189 even, and then get the continuation. So similar thesis, shorter term pullback potentially, and then we would get the continuation up into those next levels. Moving over to the Dow here on the weekly, similar thesis to everything else, right at resistance, still looks bullish, got a nice little boost from the banks on the Friday session, so it did finish basically at the high of the week, right at that 345.24 level, just a few cents below it for the close, looking for 347.67 to the upside. If that breaks, then I'm watching 350.92. So looking at these wicks here going back to November for that next level. And then if this area breaks, like I said, looking for about another $5 to $6 of upside to that next higher level. Moving over to the daily chart, bullish momentum, bullish RSI looks good. Again, a little bit extended. Last time we got extended, we got a fairly decent pullback, so certainly could pull back to trend, sitting down at 342.14 before we get that slingshot into the end of the week. Either way here, though, I do expect price to be higher at the end of the week. Moving over to copper divided by gold, you can see that's been rallying here for a couple of weeks in a row now. You can see that clear divergence still from mid-March where the SPY was going higher. This ratio was going lower, but we are starting to curve up. We're definitely getting into that zone where we find some resistance on the EMAs on this ratio. But as long as these continue to go higher together, that should be a nice bullish sign for the SPY. Similarly here on the equal weighted S&Ps, you can see there was clear divergence early in May with the SPY going higher and the equal weighted basically sitting flat. But we've actually closed that gap quite a bit over the last few weeks. Been rallying up, as well as the SPY rallying up together, again confirming that rally and a widening breadth over the last few weeks. We've talked about that fairly extensively, but this ratio looks a lot better now than it did just a few months ago. Moving over to the ratios, looking at the Nasdaq SPY. Nasdaq SPY actually broke out, so we're still in this channel. You can see we took out those previous highs. We can still look at 355 as a potential area for rejection. That would be the high going back to November of 22. So breakout here, continuing higher. Momentum is fading and RSI is definitely overbought here on the weekly, but we are continuing higher. We thought we might get a little bit of a breakdown from this level. 343 was what we were watching. And like I said, we do have a breakout now, and the Nasdaq is continuing to outperform the SPY. Looking at the Nasdaq Russell, we actually continue to hold at this 818 area. The Russell has been outperforming the SPY, and the Nasdaq has been outperforming the SPY as well, so this is still holding basically flat at resistance. Momentum pulling back fairly dramatically, RSI getting out of overbought conditions, but still very high here. Moving over to the SPX divided by the M2 money supply, you can see we've broken above that 21-22 level, and now we're looking at that pre-COVID high, the all-time high, and soon to be this high in my opinion, sitting at 22.05. Because the M2 money supply has been contracting, as the market continues to go higher, this ratio is also continuing to go higher. And you can see here, this marked the top in February of 20, as well as November of 21, before we had significant breakdowns from that level. So if we get into here, that would be a pretty good indicator that we might be topping at that area. You can see it took a few weeks the last time we got here. We chopped in this zone at that resistance area before breaking down, but it has marked the top the last two iterations before we had significant pullbacks into last year's bear market. Overall, momentum and RSI are still bullish, but watching that 22.05 level pretty closely. Moving over to Apple and Tesla, Apple came down, tagged the low from the week of 26 June, and then bounced right back into middle of that range. You can see it's still on a very bullish trajectory. A little bit overbought for sure. You can see that here on the RSI as well as the extension from the 9 EMA on the weekly chart. All-time high close sitting at 193.96. Could absolutely push into that area, get a double top at that zone, and then we start to see a more significant pullback. But right now, everything still looks bullish on Apple. Major trend resistance above that level is sitting up around 200 or 201. Tesla, on the other hand, we've talked about this fairly extensively. It's in a wedge formation right now, continues to look bullish. Also very extended, momentum stepping down for the first week here in a while, and RSI is also overbought. But with the news of the new Tesla truck and the bullish momentum on the shorter time frames, I do think this is still going to give us that rising wedge, a blow off top, and then a continuation lower at some point. Moving over to Microsoft and Google, Microsoft still struggling at its all-time highs, continues to wick that level. If this breaks out, that could be a pretty bullish development, but momentum is fading, RSI also cooling off. So we have a little bit of divergence, higher prices on this most recent candle with lower RSI. If this does not pick up and break that divergence, then you would expect this is going to pull back a little bit stronger. You can see this move has been very dramatic on Microsoft. It is one of the AI plays, so it could absolutely go higher in the short term. But at some point, this is going to pull back and get a little bit more mean reversion. The 55 and 144 EMAs here are sitting at 271.81 and 271.43 respectively, which is a long way down from current prices. Looking at Google, we're kind of in the middle of this range. We are above the August highs, but we're struggling at this 126.42 level. We've been here for a while. We had kind of a pullback to VWAP. We bounced from there. We're retesting that same high now, which is also the lows from this consolidation in February. If it breaks these lows, you could absolutely look for a test of this 143.47 area. That would be the high from that consolidation. I was surprised to see that momentum did not step up with that bullish candle. RSI looked pretty good. Again, you want to see it take out this previous high on RSI, break that divergence, and it did look pretty good on the week, up 4.63%. Moving over to staples and discretionary. Staples still consolidating in this area. Had a nice close on the week. Doesn't mean that we can't go a little bit higher, get a rejection like we did the previous week. We're kind of stuck in a zone here above the 55, but below the 21, as well as below the VWAP. Momentum moving towards bullish, but not very convincingly. RSI basically at that 50 line. Still consolidating. Might see a move like this where you come back down, or you could see a consolidation and a push higher into this previous highs. The trend is still intact here, and it does look like this is going to push up to 75.40 or 77.50 at some point over the next few weeks. Discretionary, super bullish week, sitting at that 174.76 area, just above it on the close. So we did take out that wick going back to the August high. We're in this mid-range here from the consolidation in March and April of last year. And if we did push up to those highs, that would be around 189.38. That would be a big move. And if we did continue on this trajectory, basically going straight up to those highs, that would be a big overextension in my opinion. We're already in overbought conditions. Momentum is still bullish, so you can't discount it at this point. But it is something to watch, taking out this high, looking at this previous high, like I said, with some pretty extreme overextension already. Moving over to utilities and oil and gas. Utilities has been coiling here for a bit. We've been watching it. Currently sitting at VWAP and the 21 EMA at the top of this consolidation. If it breaks 67.18, that would look quite bullish. Looking up to 68.36 or the high from this previous consolidation up around $70. Either way, utilities showing some strength, momentum moving back towards bullish, and it could have a couple week run into this previous zone. Oil and gas also threw a wick to that resistance at 135.07. We were watching that for a while. That was also right on top of the 55 EMA here on the weekly chart. Momentum bullish, RSI right at the midpoint, but this is definitely coiling and moving higher. I think this is probably a retest of this initial zone, highly traded zone you can see here at 133.50, and I would expect this to have follow through to the upside. We're above all the EMAs and SMAs except for the 55 week moving average. And if we can get back into that zone on a second retest, then you could even look for a move up to around 142 or so. Either way, oil and gas also coiling, also looking more bullish, coming off of a solid base. Moving over to transports, momentum bullish, RSI bullish, higher close, everything looks good. We're still in this channel looking for a retest of the upper trend line up around 266.42, which is up around this midpoint from this previous consolidation. The highs would be sitting up around 277 to 280, but overall transports looks like it's going higher. It took out these two previous highs and it still looks bullish. Moving over to breadth on the 50 and 200 day averages, you can see the 50 day coming into that zone that marks pretty much all the tops. Once we get up to that 92.25 level here on the 50 day average, we don't stay in that area for very long before we have a consolidation lower and a pullback. And we're getting close to that one more time. We're at 82.07 right now. So another 10 points to the upside, and you would expect to find resistance there before we ultimately get a pullback. Sometimes you hang in that zone for longer. You can see here going back to March of 21, where we chopped in that zone for a couple of weeks before ultimately pulling back a little bit more significantly. But it is definitely something to watch here on the 50-day average. Looking at the 200, you can see we're getting close to the high from January of 23, sitting at 76.04. We're in this rising wedge. We have it on both charts here. We've been talking about that in the daily videos. And if we get into that 76.04 level, I would expect to hit the 92.25 level at the same time. And then we would ultimately be looking for a little bit more rejection from that point. Certainly could see a big overthrow and then a continuation lower, similar to what I've been looking for on Tesla. Moving over to yields just for a moment, you can see they found some legs on Friday. I don't really expect the 10-year to go much higher than current levels. It's been consolidating in here for a while. If it does break down by chance, that could be a little bit more bullish development. RSI at that 50 line looking to break down. Momentum also looking more bearish. 2-year could definitely hold in this zone. The Fed continues to say higher for longer, which is definitely going to affect those 2-year yields. So if it did move down to 450 and hold in this zone, that would be a pretty reasonable expectation, but it could absolutely break down a little bit further based on the inflation numbers that we've been seeing, as they have been very positive. Moving over to the dollar with the S&Ps overlaid on top of it, you can see we've been falling through the floor, huge bearish candle. We're at this trend, which is interesting. Certainly could bounce from here or find some support at the 200 on the weekly chart. You can see how extended we've been from that level, huge overextension into October of 22, marking the bottom of the markets, and then the dollar has been falling ever since then. And you can see during the periods where this was falling, we have the stock market moving higher, and this still looks bearish and could absolutely go lower, continuing to drive the stock market higher. On the shorter time frames, we did see a little bit of support coming through at that level, but overall I would expect this to continue lower. Momentum just getting started here. RSI not oversold quite yet, and I would expect it to get there and retest these lower EMAs and SMAs as well. Moving over to JNK and TLT, JNK continues to coil in this area. Got a new higher close, which is interesting. Wick to that 92.50 level, certainly could continue higher. Momentum basically zero. RSI also basically at the 50 line, but it does look a little bit more bullish. We closed above the 55-week moving average, showing a little bit more strength in high yields. TLT, on the other hand, did find some bullishness on the week with yields going lower, but we did not engulf the previous candle. Certainly could bounce from here and look a little bit more bullish coming off of that 100.05 level, but not very convincing quite yet. Moving over to the volatility indices, these really haven't been doing very much. I didn't even cover them in the Friday video because they've generally been unchanged. You can see we did gap higher and then close basically at the same lows. Still watching 1177, which is the low going back to all the way into 2018 and 2019. So certainly could chop in this zone for a while. It did so during the period. Overall, not giving us much information here at all. Moving over to my accounts, I ended up around 1.6%. The Nasdaq was up about 3.5%, so I did not perform as well as I could have. The markets looked super aggressive and we are getting pretty extended, so I did make some money with that move, but not as much as I should have. And then looking into the Monday session, I do have some calls to protect myself from a little bit more downside in the Monday session. Talked about it in the Friday video. I think we'll see a little bit more pullback into the shorter term EMAs on the shorter time frames. But like I said, on the charts, I do think we'll see a higher close for the week. Everything still looks bullish on the longer time frames. It's just those shorter ones that are showing a little bit more pullback. Going into the Monday session, positions, I have a covered call here now on the IWM at 192. I also have 2 covered calls on the Qs sitting at 376 and 377. And then I have a 380 and a 381 call protecting me from a little bit more downside. Those are in some profits already, so I might look to take those off depending on what I see on Monday. I also have a 375 put. I don't expect to see any issues with that. I don't think we'll pull back that far on Monday, but overall a little bit neutral going into Monday's session, but overall still bullish for the week. Let me know down in the comment section what you think of the banks offsetting potential losses. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, this is not financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.